The mortgage stress test in Canada remains unchanged as a regulator thinks keeping it in place is a prudent risk mitigating strategy. With Bank of Canada increasing its lending rate, home buyers could be put at risk in case lending rates keep on going up. This higher qualifying rate builds a sort of buffer while trying to keep a lid on speculative Canadian real estate. Canadian mortgage stress test is a way for lenders to ensure borrowers will be able to meet their mortgage payments even if bank rates were to rise or if their financial circumstances were to change. It requires borrowers to qualify for a mortgage at a higher rate than actually being offered, which is a 5-year posted rate or 2% above it, whichever is higher. The sole purpose of this test is to protect borrowers from taking on more mortgage debt than they can afford, thus protecting lenders from default while maintaining stability of financial system here in Canada. Canadian banking regulator recently mentioned a review of mortgage guidelines in January but left mortgage stress test parameters unchanged. They are citing uncertain financial outlook where increasing rate by Bank of Canada to tame record high inflation is a major contributing factor. No doubt mortgage rates have more than doubled as compared to last year, hence there was an expectation in the market that stress test rules might be relaxed. Finance Minister Christina Freeland said, and I quote, maintaining minimum qualifying rates supports prudent underwriting standards in mortgages and builds in a buffer for home buyers in case of changing economic or personal financial circumstances. Close quote. Canadian mortgage stress test was put in place to ensure that borrowers are able to meet their mortgage obligations even if rates are to go up or their financial circumstances change. This was introduced in response to concerns about red-hot housing market and household debt levels in Canada. Initially, it was designed to protect borrowers from taking on too much debt while ensuring that they would be able to meet their mortgage payments even if economy were to take turn for the worst. Another intention was to protect lenders from default by ensuring that borrowers had financial means to meet their mortgage obligations. It's hard to say if mortgage stress test has been effective in curbing housing bubble as there are many factors at play. For sure, it has made more difficult for some borrowers to qualify for a mortgage, and first-time home buyers are amongst them. Logic is it helps prevent borrowers from taking on more mortgage debt than they can afford, thus protecting long-term stability of housing market. Ultimately, the effectiveness of mortgage stress test in curbing housing bubble will depend on how it is implemented and how it interacts with other economic and policy decisions taken by Bank of Canada. The impact of mortgage stress test on housing market will depend on number of factors including overall strength of the economy, housing demand and availability of credit. In general, it makes more difficult for some borrowers to qualify for a mortgage, thereby reduces demand for housing, thus lower price growth or even decline in some markets. It helps to reduce default risk on mortgages while protecting against a potential housing bubble. Just keep in mind, stress test is just one factor that can affect housing market. Its impact will depend on how it interacts with other economic policy decisions taken by government or Bank of Canada. Mortgage stress test was initiated couple of years ago in Canada where intention was to cool down speculation in housing market. No doubt it was a good idea where people qualify at a higher rate while building a safety buffer, but the jury is still out how effective it is. Clearly, people have found loopholes to qualify for a mortgage, which was clearly evident from mortgage fraud scandal that came out recently. Now, those who should not have got mortgage approvals or have bought houses at inflated prices are calling for help. Let me stick out my neck and say, in a capitalistic society, you cannot have privatizing profits and socializing losses. Hope you get the idea. But that is me. I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.